So, good afternoon, hello, hola, bonjour, namaste, namaskaram, vanakkam, ram ram, sat sri akal, adab, and salam. My name is Tanmay Sarkar, a freelance consultant, community development specialist, and technician. Today, we are going to discuss about financial literacy. What is financial literacy? Financial literacy refers to the ability to understand, effectively use financial skills, including budgeting, investment, savings, borrowings, and managing money wisely. It involves knowledge of financial concepts such as interest rates, inflations, credit, loans, and retirement planning, enabling individual to make informed financial decisions. What is the importance of financial literacy? Financial literacy is important to better money management, debt management, smart investment decisions, retirement planning, protection against financial fraud, economic growth and stability, entrepreneurial success. So, one of the most essential part of financial literacy is financial planning. So, what is financial planning? Financial planning is process of setting financial goals, creating a roadmap to achieve them, and managing resources effectively to ensure financial security and growth. It involves budgeting, saving, investing, tax planning, and risk management to help individuals and businesses achieve their financial objectives. So, to better understand financial planning, we have to consider our income and expenses. So, without income, there is no financial planning. So, types of income. For the sake of simplicity, we just divided into two categories. One is active income, another is passive income. What is active income? Income earned through direct effort is active income. For example, salary or wages income, freelancer or consultation income, business income. What is passive income? Income that continues to come in little or no effort. No active effort is called passive income. It can be categorized in multiple ways, such as portfolio income, residual income, GOPT and security benefit income, etc. For the sake of simplicity, we divide passive income into two categories. One is one-time income and another is multiple time income. One-time passive income or examples of one-time passive income are lottery winnings, inheritance or property, gift and awards, which we can get only one-time income from that. Multiple time incomes, example of multiple time incomes are rental income, dividend income, interest income, and royalties. So, understand Now we will discuss about our expenses, understand our expenses. We categorized it in three type: necessary expenses, for example nutritious food, grocery, utility bills, healthcare and medical education, which is very essential for us for living, for our family, for our children. Unnecessary or luxury income, which is not much essential to show off, to maintain social judgments. For many purpose people do it, but it is not actually necessary, like unnecessary unwanted shopping, excessive traveling, gambling, consumption of alcohol and narcotics. Then comes the most hardest part of the expenses. Life is full of surprises, so sometimes some unexpected happens to us, so that is called unexpected expenses. The example of unexpected expenses are medical emergencies, car and home repairs, family emergencies, technology and gadget failure. To tackle up unexpected expenses, some instrument can be used, such as insurance, pension, investment and loan. To understand the instruments and other techniques, we first understand our banking system and so on. Banks plays a vital role in financial planning. There are many types of banks. Now we will discuss about their types, what they do. First of all, commercial banks such as SBI, PNB, HDFC, ICICI. Commercial banks are also two types. One is private sector bank, another is public sector bank. We'll discuss it more elaborately later on. So commercial banks are banks that provide financial services to individuals, to businesses and corporations. There are another bank is called cooperative bank. These banks operate on a cooperative basis, helping farmers, small businesses, lower income groups. Regional rural banks, or RRBs, or we call it Grameen Bank, are bank that caters to rural areas, supporting farmers and small businesses, such as Prathama Gramin Bank and Karnataka Gramin Bank or State Gramin Bank. These banks are usually caters to rural people, for rural areas. And next one is payment bank. Payment banks are digital banks that provide basic banking services, but cannot issue loans, such as Airtel Payment Bank, Paytm Payment Bank. We all heard about it, and also I think all of us used it sometime. The next one is a foreign bank. Banks headquartered in another country but operating in India. That type of bank is foreign bank, such as SSBC Bank and Citibank. There is another bank known as Islamic Bank. Islamic Bank are the bank that follows Islamic banking principles. That is, they do not charge any interest from their customers, or they call it riba. Another bank is Developmental Bank, the bank that fund large infrastructure and industrial projects are called developmental bank, such as SIDBI, NABARD. Next is central bank, the apex financial institution that regulate all banks in a country is called central bank. For India, it is RBI, which regulates all the banks, banking systems, monetary policy, making monetary policy, printing notes, etc. Now, leveraging banking services for financial planning. We can leverage banking services to tackle up our expenses, specifically unexpected expenses, which comes without any planning, without any notice. That's why it is called unexpected expenses. So there are many types of accounts in bank, such as banks usually categorize it in two types. One type is CASA, another type is RAFA. CASA means current account and savings account. Savings account that helps individuals save money with little interest, and current account used by businesses and professionals for frequent transaction. Since business and professionals have to transact multiple times, so they need a current account, because savings account have some limit of transactions, monthly transactions. So deposit account, or RAFA. RAFA means recurring deposit account and fixed deposit account. Fixed deposit account pays higher interest rates for lock-in savings over a fixed period, and recurring deposit account allows individual to save small amount monthly and earn some interests. So this is also a earning opportunity, passive income, where you don't have to put your effort actively. Money put its effort for you, but you have to put some money first. Bank also provide loans for your need. There are different types of loans for different types of purposes. We will discuss it in later video. Investment. Bank allows to invest in mutual funds, stock market, investment and government schemes such as PPF, NSC, SSY, Sukanya Samriddhi Yojana for girls, etc. Bank also provide insurance service through bank assurance. There are different types of necessities. We will discuss more elaborately in later videos. Retirement and pension service. Bank also provide retirement and pension service such as EPF, NPS, and APY to tackle up your old age insecurities. When you reach a certain age, there are no physical power and mental power to do uh, your regular income. In that time, pension will be beneficial for everyone. So that's why it is called retirement policies or old age security. Bank also provide some facilities of government schemes and subsidies such as Jan Dhan Yojana, PM Kisan Samman Nidhi, PM Awas Yojana, etc. Apart from that, bank provides some value-added services such as debit card, credit card, mobile banking, internet banking, demand draft, checks, NEFT, RTGS, IMPS for money transfer, UPI service, SMS alert, which are subject to charges or money deduction. So before taking any services, this type of services, you have to check how much money will be deducted from your account or from you. So there are many other types of facilities in bank, and one of the bank one type of account is like Jan Dhan account, which is zero balance account. So if people of rural people don't open any account, cannot afford to open an account with a minimum balance, they can go for it. And if any financial fraud or scam or anything happens, or any technical glitches in your transaction happens, then you can use bank ombudsman or grievance redressal of RBI website. We will discuss all about it in another video or later on. Thanks for watching. Please comment down below for any questions and queries, or if I did any mistakes. LinkedIn is a platform where direct live is not possible, so have to use some other technologies. So that is also new to me. Please suggest. Thank you. Have a good day.